This week you may have heard that a bunch of Redditors somehow managed to manipulate the stock market to make big bucks from the video game retail store Gamestop. Because of the rise of online game buying platforms like Steam, Epic Games or Origin, traditional video game retail stores have been taking a hit in recent years, made worse by the pandemic and stay-at-home mandates. One of these has been GameStop, where the average price of a stake or share in the company bottomed out at around $4 per stake, a mere 10% of what it was 5 years ago. A share entitles the holder to a cut of the cake when the company makes profits. You own 5% of the shares, you get 5% of the profit. Except GameStop isn't making any profit, so the value of a stake in the company has dropped massively. Enter hedge funds, the circling sharks of the financial industry. If your stock portfolio isn't doing very well, you can hire a hedge fund company to borrow your failing shares, sell them for you, wait for the price to go lower, then buy them back for a lower price, giving them back to you and taking a cut of the profit for themselves. This is called shorting. Depending on your point of view, this is either smart business or incredibly scummy, because everyone who bought the borrowed stock shares has now been screwed over. For many people on the stock trading subreddit Wall Street Bets, this is scummy behavior. The main people who benefit from this arrangement is the already wealthy boomers. You see, young people have been especially hard hit by the pandemic. People who grew up during the hardship of the Great Recession are now in their 20s, being let down again by the coronavirus recession. Many of the more tech-savvy people turn to gambling on the stock market as a way to make money, and many apps have been created to help normal people start investing. Wall Street Bets is overwhelmingly made up of these young people with not much else to lose. So in mid-January of 2021, they conspired to rise up against the corporate fat cats and beat the hedge fund at their own game. On the 26th of January, when the hedge funders put up their borrowed stock for sale, everyone on Wall Street Bets would purchase shares in GameStop at the same time for around $20 per share. This unexpected increase in demand would cause the price to skyrocket, then professional traders catch on, start buying GameStop too so they don't miss out, which is gladly sold to them by the Redditors. The Redditors are now rich, the hedge funders are losing billions and disappointing their clients, and the professional traders will get what they deserve when they realize they've been pulled into a pyramid scheme. And this worked! GameStop share prices rocketed to over $370. Some Reddit users cashed out immediately, making over 1,000% profit, while others are waiting until the price hits exactly $420.69 as a one final middle finger to the financial industry. Many Redditors are now moving on to other dying companies like the cinema chain AMC, Nokia, BlackBerry and Blockbuster in the hope of replicating the phenomenon. Surely this is illegal, right? The Securities and Exchange Commission, the government agency responsible for regulating the stock market, has had some very strong words to say about the practice, but there isn't really much that they can do. People are simply pressing buttons on an app in an order that they are legally allowed to press. Who knows how this will end? Nobody can say for sure, but all experts are in agreement. Somebody is going to lose a lot of money eventually. What do you think? Is this putting wealth back into the hands of everyday people, or are they no better than the hedge funders they're trying to beat? Is this a generational fight back, or a minor dispute between the middle and upper class? Feel free to argue about it in the comments. I won't reply, but it's funny to watch.